After a very eventful earnings call last week, Tesla stock is soaring, actually more than I expected. And in this video, we have to cover what is going on, what we have to expect to happen next, and if this is just the starting point of some crazy vertical explosion of the stock towards 500, 600, or 1,000, or if it's an air pocket, or we are steering towards an air pocket, and we should not put too much focus on this whole situation. And as you can see over the last few days, here was the earnings call. It was at 338, and then it dropped right after, right? The morning opening after at 419, but now it's at 460 and it was even at 466 today. So what do we make out of this? How does it relate to what I said on Friday on Sunday, my trading strategy for this week and before the big shareholder meeting and for the whole rest of the year? Where are we at? Was I wrong? Was I right? And what do we do next? I just thought I have to share some thoughts here because you guys normally are interested in my little strategies, and I have to comment on some things that changed over the last 48 hours. So the big picture is we are still in digestion mode, or maybe not so much anymore right now, Tuesday in the middle of the market day. I said on Sunday, my outlook is the earnings were okay, but the earnings also outlined a beautiful path to a very powerful future of Tesla in a very effective way. They basically revealed the whole trajectory where we are going, and Elon made a lot of things clear. He made clear that Optimus will be revealed. The final and commercial version of Optimus, by the way, that will go into mass production. There's no doubt in my mind that this version will be revealed in Q1 of 2026, which is not too long from now. But that also means that we removed a catalyst from Q4, from the November meeting on November 6th, and also all the way to the end of the year. We know Optimus is not coming in that time frame because now we know it's coming in Q1. So that removed one catalyst that I saw for the stock being forced higher end of the year or throughout the next months to the end of the year. We also heard news from Robotaxi that, Elon elaborated on, okay, the Robotaxi safety drivers in Austin will be removed partially in some of the Robotaxis by end of the year. As you know, my prediction, long-standing, was that we will see the Robotaxi safety driver being removed by November or in November. So basically, Elon confirmed what I suspected. Maybe it's going to be December. Maybe I was off by 1 month. Maybe not. But he also said now it's only going to be in a few Robotaxis. Whatever it will be, it is now priced into the stock. And so my take on this whole situation was that I actually do not believe there are major catalysts for Tesla stock. That's what I told you guys, and that was my strategy. And I assumed we are in a channel. We are going to stay in a channel unless the market makes some major moves. Between 410 down here, 410 right here, and 460 over the next days, especially this week. And some of you might say, Joe, you were wrong because we broke the channel. And you will be right. I was a little wrong, potentially. Let's see how we end the week. But this is definitely not a comfort zone for my tactical trading strategy. And as you know, I'm a long-term Tesla bull. I have loaded up on shares. I've loaded up on leaps, leap call options long-term for end of 2026, beginning of 2027. And as you all probably know, my portfolio is actually effectively leveraged. So I'm net long over 100% Tesla. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. I also have other positions, but I'm net long over 100% Tesla because of the call options and some short puts. So that means I'm well positioned, but on top of that, because I'm greedy, as you know, and I share some of my greedy strategies, I want to add additional alpha through some churn strategies. So I'm selling puts mostly when I'm bullish. And sometimes I'm also selling calls. And sometimes I'm also doing both. If you're not familiar with that, don't touch these strategies too much. They can be very dangerous. And today I had to make some tactical moves. But I want to share them with you because they're tied into the greater insights into the Tesla stock and where this is all going. So I said 410, 460. I was selling actually some calls yesterday, 470 calls. And before that, I sold 415 puts, which was a little risky to be totally frank, but I was a little greedy, and some 4 or 5 puts. So the puts look very good, of course. The call is getting in very dangerous territory here, so I don't feel too comfortable. I removed some of that position, but I'm still firm that we are probably not going to exceed 470 and very likely not even 460. I'm sticking to my prediction. So now to the big question. What does this move mean? Where is it inspired from? And where do we go from here midterm over the next months? Do I think my thesis that Tesla will not have serious catalysts and will not move more than the market? Did it turn out to be wrong? Was I wrong? Now, the move from down here, right, from after earnings to now, what is it based on? I call this earnings digestion. We often see these patterns that the Monday after earnings, the stock actually starts reacting. Why is that? Because all the news are out in earnings. Some earnings are confusing to the average run-of-the-mill Wall Street analyst and even fund manager. And that is the case when you have a company that's very disruptive like Tesla, that does complicated things that are not just price per earnings, earnings per share, and that are not just based in balance sheet and P&L, but on some complicated future visions. And so that's what we saw this time. It was very confusing if you're a standard analyst because you just see, well, what does it all mean? Where are the numbers? But you know Tesla is working on crazy things. Maybe you watch my channel. Maybe you watch other YouTubers on Tesla, or you listen to Adam Jonas or Dan Ives at Morgan Stanley and Redbush. And so that's exactly what happened. The fund managers were a little confused, right, after the earnings call. They sold a little Tesla, it dropped, and they bought it back. They didn't know what to do. And then over the weekend, we saw some very, very interesting statements. I think the most important one, besides Dan Ives saying this is all very bullish, of course, Kathy Wood saying this is all very bullish, but Adam Jonas of Morgan Stanley, probably one of the most important analysts in the AI, AGI, Tesla, and robotics space, he said in a note on Monday that in his assessment, Tesla has effectively solved FSD. Tesla has effectively solved the great challenge of autonomous transport. That from Morgan Stanley, from the lead analyst, is like a very, very big deal. And I think all of that contributed to the fund managers on Monday saying, you know what, this seems to be a pretty bullish earnings situation. They probably bought into this greater narrative that I explained to you guys, that actually for the first time we have clear line of sight of Tesla achieving robotics and autonomy on a 6 to 9 months timescale with concrete milestones that are now very clear. And I think that is driving the stock. So what does it all mean? Does it mean, let's cut right to the chase, does that mean that revelation of these fund managers, the revelation of Morgan Stanley, Dan Ives, Redbush, all these guys, that they are now agreeing with me that we have clear line of sight? Does that mean we are going to 700? Does it mean we break 500? In my assessment, the answer is no short term. Why is that? Because what we see here is a improvement in conviction of the stock that could continue to 470 or something. But I stick to my original assessment that we do not have real hard catalysts, not even soft catalysts coming up. That this is a tactical repricing of the market of Tesla. That now a lot of funds are saying, you know what? We should get prepared. We should take positions in Tesla or beef our positions up slightly because this is starting to get very interesting. Okay, so it is slightly bullish and that's why we are seeing this uptrend, but it's not a sustained forcing function that drives the stock through the roof. Now, what would be a sustained forcing function? We have seen it in 2020, the launch of the Model 3. A sustained forcing function means that we have a new unlocked business TAM, right? A new vertical like Robotaxi or Optimus, that this TAM is starting to show real traction and that this has to be booked into the models and that this cash coming in has no end in sight. Because that is a fundamental repricing of the stock that has to happen immediately. And that can drive a stock like Tesla up to 500, 600, 700, 800, 900, 1000 in basically 6 weeks. That's what we call vertical explosion. But in order to a vertical explosion to happen, there needs to be real hard cash pressure behind it. And that is not the case right now. What we see right now is a narrative shift in Tesla's favor, supported by some top analysts after the earnings that tell these funds, dudes, the time is coming. We see the light at the end of the tunnel. This is getting really real. So it's a narrative shift, sentiment shift, conviction shift. And they can lead to an uppricing of a stock, but not to a vertical explosion. Now, what does it mean? Does it mean 460 is it. I still think 460 is it. If you totally ask me, I think, we are going to flatten out between 460 and 470 for now this week. I don't think there's much more power in here to drive it to 488 by Friday. I really don't, but I can't be completely sure because we're still in a strong uptrend. I think November 6 might serve as another little catalyst, but generally I stick to my assessment. We're going sideways. We're going with a beta of 2 with the market. Maybe I add now a slightly more bullish perspective to it short term. So maybe we go up a little more than 2. So if we see another 5% run up of the market, Tesla will go above 500 by end of the year. That's a given, in my opinion. But if the market flatlines, which it probably won't, it will probably run up 5% or something. So 500 are completely in the cards this year, but it's very hard for me to see some radical catalyst here. And if we see a market correction, Tesla will go down 2x of the NASDAQ. So that is my assessment. So I would not overinterpret this. Let's see if I'm wrong. Let's see if we actually get pushed here over 470 by end of the week. But I would rather bet on a little bit of what we see here. So no big change. I think what I did underappreciate is how much of a narrative shift this actually has initiated, and maybe we have more way to run up. But there is no strategic change here in the catalyst itself. Now, one last comment. I just had a great show with Herbert, by the way, where we discussed these things. The way I see it, the long-term strategy is always you need to understand where is the hard catalyst. I think the hard catalyst is in May next year. That is where Robotaxi will start generating serious cash flows. I'm talking about around 5% on an annualized rate of Tesla's total free cash flow could come from Robotaxi at that point. And that is the inflection point, in my opinion, somewhere around there where everyone says, oh, it's game over. Now it's going to double cash flow of all of Tesla very soon and then triple, quadruple it. So then it's game over. Then that could drive the stock dramatically higher. Everything that happens before, every kind of run up, if we see, for example, 600 of even 550 before, I think that creates some kind of an air pocket, right? If you get really high, let's say 600 in January or something, or even 550, I think you're creating an air pocket that you either are able to bridge into May, for example, by a great Optimus launch, which is still far away from cash flow. Robotaxi will be before. But a great Optimus launch could then bridge you over the air pocket, maybe into the run-up, into the real run-up, but very likely not. So the earlier you see this high run-up beyond that critical line, which I see around 488, maybe 500, the more you will see a drop back. That's just reality. And the closer that run-up is to the hard inflection point, the less of a drop you necessarily need to see because you could bridge right into it. So if it runs up like crazy into 650 by March, I would not necessarily bet on it dropping back down to 550 or whatever it is. It might just get bridged right into the run-up. So the closer we get to some real hard catalyst, the less you can rely on a drop back. The earlier it happens, the more it will drop back. And I really think we are on the upper end. I think this 488 is something that is hard to exceed and justify to exceed before we see that inflection point. So the closer we get to 488, the more skeptical I become, unless some surprise catalyst shows up. But I don't think that will be the case. I think Optimus is the real next one, somewhere in Q1. And then the final one that really takes us to a sustained, totally new level where we see 100% stock appreciation or something like this in short periods of time, probably going to be in Q2 next year. That's my take. I give you real-time takes on this, which no one else does because this is dangerous. Because if I'm wrong, everyone sees it. I love it. I don't need to impress you guys. I need to impress myself. That's why I love sharing these things, because I'm actually actively trading. And it's good to reflect on these things and shift my strategies in real time, because that's how you can be wrong and still make money. You need to react fast. If you're wrong, then everything is still fine. I hope that was interesting. See you tomorrow.